How do you calculate the real cost of a loan against your cash value, knowing you're also earning interest on your cash value? Oh, that's a good question. You're not going to be able to calculate it until after the fact. You can make a guess, but the challenge comes with not knowing what the actual cost of the underlying insurance is going to be until after it gets charged. So take whole life into consideration. We have a policy that you can borrow at 6% interest and you get a credit of 6% interest. Well, you don't actually get a credit of 6% interest. That's the gross amount. You have insurance expenses that get deducted from that, just like if you were going to get a dividend, a 6% dividend. You don't actually see 6% return. You see whatever the costs are after the insurance expenses. And then there's some other factors involved, but insurance companies don't credit every single policy the same when it comes to the dividend rate. So their announced dividend rate is X amount, but any particular age group may get a certain percentage of that. And it's up to them to split it up so that each of the policies end up performing to the guarantees, to at least the guarantees that they offer. So if you have if you have $1 million life insurance policy and you put $10,000 a year into that policy, it's going to start out and they're going to say, okay, these are the projections that we're going to make. $10,000 a year goes into the policy in the early years, and it has to compound at a certain rate in order to meet that $1 million death benefit by X age, by age 95 or by age 100. And so they're going to count on that happening. Dividend rates vary throughout the years, and so they're going to have to adjust it so that stays on target. That has to stay on target. So how they divvy it up may vary among the actual insureds. So something to keep in mind. All the rates that we hear being announced, the dividend rates and such, those don't tell you the actual amount. Those are just the gross numbers. The net numbers, we don't know until after you get credited for that. So something to be aware of. So I would figure it out after you're done. After you're done, or at your policy anniversary, you can look at what the loan is. You can look and see what you got credited based on that loan amount. Now that's assuming you have a direct recognition loan. A non-direct recognition loan, it won't matter what the rate is that you're borrowing from. That will not affect the growth in the policy. So in that case, then you're going to have to see what the dividend rate is and how much you ended up netting there. So you'll still have to wait till the end of the year so that you can get your statement and do those calculations. I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.